A federal tax lien is the government's legal claim against your property when you neglect or fail to pay your tax debt. The lien protects the government's interest against all of your property. Most people immediately think of a lien being filed against their home. But when the IRS files a lien, it encumbers everything you own, including your bank account, retirement accounts, investments, vehicles, and business assets held in your personal name. And of course, your real estate. The tax lien also encumbers property that you may acquire in the future. That's right. People are often unaware that the lien applies to any property that you acquire after the lien was filed. So if the IRS files a tax lien against you today, and you buy a new house 5 years from now, the lien will attach to that new property as well. So the next question is, how do I get rid of the lien? The two most common ways to get rid of a tax lien are, number one, pay the tax, either through an installment agreement or through an offer in compromise. Once the tax is paid, the lien will self-release. Number two is wait out the clock. You see, the IRS only has 10 years to collect back taxes. And after 10 years, the tax becomes uncollectible. At that time, the lien will also self-release. There are three other strategies besides paying the tax and waiting out the clock. They are lien withdrawal, lien subordination, and lien discharge. A withdrawal removes the public notice of the federal tax lien and assures that the IRS is no longer competing with other creditors for your property. However, you're still going to be liable for the tax amount that is due. The lien itself is still valid, still in place, but it's just no longer public information. A lien subordination does not remove the lien, but it allows other creditors to move ahead of the IRS, which may make it easier for you to get a loan or a mortgage. And that is because lenders like to be in first priority position in terms of their encumbrance against your property. And they usually won't lend to you if they can't be in first priority position. A subordination allows the lender to be in first position and for the IRS to be in second position. That makes the lender more likely to lend. The final is the discharge. A discharge removes the lien against a specific piece of property. There are several Internal Revenue Code provisions that determine your eligibility. Essentially, you're going to need to argue that the government's paperwork was not in order when it filed the lien, or that there is a faster and easier way to resolve the problem, or that withdrawal will be in the best interest of both you and the government.